Good morning, everybody. What can you say? Wow. Yesterday was quite the rout after the those Fed notes or whatever. And we had a heads up, but you just don't know what's going to trigger it. The market internal said, be careful, do smaller size on the longs. And of course they didn't, they never do suggest how big some type of correction could happen. Certainly in one day, it does not suggest that. But you had a news event that triggered things, but the internals warned us that, hey, just be careful. And let's see where they are now. So they got room to correct further before they would be lined up as a buy. That doesn't mean the market has to keep dropping from here. One of the things historically that you see looking at the breadth internal is even when it comes down, like this is a big down bar, right? But even when it comes down relatively hard like that, when this internal breadth gauge gets to zero, things tend to stabilize. And I was going to say more so in an uptrend, but this is an uptrend. It is an uptrend. It still hasn't made a lower low. And while it's got this little breakout failure there on SPX, that's just a pullback to minor support. Now, things aren't supposed to pull back to minor support in one day. That's the problem. So that's a power bar, momentum power bar. And as we've discussed in the past, momentum power bars create voids. So, you've got this move, that happened after, looking at the NASDAQ futures here, but this move, which initially started in the morning, that was like, what's up with that? And then things just went dead. Well, this looks like, right, 10 o'clock. Things went dead, and then the news came and down it went. So we've got this void where prices could trade into. We talked about that a bit yesterday, about the trading range that was going on pre-market. So now the question is, can it get above here, which opens up the door to some kind of a move up? Right now, it's consolidating down here, creating resistance and support. And we look to the left, and the futures are down here where they bounced before. So makes total sense that they're going to stabilize here. Who the hell wants to short but an idiot? After a move like this, right into a major support area. Certainly not from this time frame. So we'll see, how this is beginning to stabilize. SPX here, big move down. We'll look at that intraday, but the internals here, sentiment is still way up here. So, if it doesn't bounce today, we get a little more, downdrafts, mini downdrafts, not like we saw yesterday, I think. And that isn't to say that, this couldn't come down and tag the 50 MA today, which would still be kind of a mini downdraft compared to yesterday's major downdraft. And that would be, and I think eventually one way or the other, that's going to be targeted as an initial place, unless ideally, it won't go all the way back down here. And part of the conversations on Monday was, hey, look, even though market internals are at an extreme warning us, it doesn't mean the markets can't go up, in the short term and get more extreme. And part of, what I said was ideally, this could poke up here, because if it starts a correction from here, and, part of, we discussed was, hey, look, last year, 5% was the biggest correction. Maybe now, another 5% correction. We don't really know, but if there's a potential 10% correction in the cards with all of this discussion now about Omicron, well, we're all sick and tired of viruses and COVID, but inflation and the Fed going to raise interest rates and so on and so forth. The thinking was, hey, if we can get higher from here, even if we get a 10% correction, it's not going to be all the way back down to the trading range, which now the S&Ps are right back down to the bottom of the trading range, which, well, from here to here, hey, there's your 5% correction. Breaking below here, which could end us up at the 200, would be a 10% correction. And then the bad part about that is you got, this mess overhead. But let's see if this trading range on the weekly continues. We've seen big red bars before. We'll see what happens with this one. Just looking at the cues. That was the initial break and the gap down. And this isn't down here yet. So maybe a little bit more to the downside. Let me just go back to those futures, which certainly have a little bit more room to get all the way down there where buyers would, be a little more comfortable to step up to the plate, down in this area here. So maybe another move down where what we would see and how we reach slowing momentum. I need to get a different drawing tool here. I'm becoming a little bit of a chart artist myself here with these drawing tools. Big momentum, initial start of momentum, bigger momentum, smaller momentum. And so if this was to break and come down here, the momentum would slow a little bit more. And then maybe we start getting a little, chop here for some kind of a retracement. And of course, we'll see what might happen as far as a bounce from there. Looking at the S&Ps, now we've got that low there at the 50 MA, which was tagged, and it's bouncing back up here, bouncing to where? Right up to this little resistance area there. So now we've got this giant wide range bar. Typically, while it's subjective, staying in the lower half maintains the bearish view about that. One of our comments that we make about wide range bars is that they're power bars, but the weakest link. And the weakest link because you can see that there's nothing to stop prices from retracing back up. So like similar to here, well, this is pretty shallow. If you can't get above here, obviously that's bearish, but it has to create resistance because there is none at this point. And that is the idea behind a 1, 2, 3 continuation pattern, is that a power bar then is followed by an inside bar or a narrow range consolidation bar that creates that resistance that sets up the continuation move down. Ken saying, some talking heads are claiming yesterday's pullback was due to inflation concerns and early interest rate hikes. Yeah, right. Well, we've been hearing about inflation for the longest time, which was, transitory. Now, maybe it's not. And interest rate hikes, we all heard last year that they were coming. So look, the media needs an excuse, Ken. We all know that. If they didn't have some kind of things to talk about, how would they sell advertising, and they'd be out of business? So, you take it with a grain of salt what they're saying. They have to do their job to produce their income and salaries. So we know a lot of it is BS. So same situation. Let's see if it chops around here. There's nothing to really stop it from going down. You got that low at this point. There's this little shelf, and if this goes sideways here, it's hard. I don't imagine that little shelf that's over here is going to stop anything. Ideally, it's not going to go all the way back down to the lows, but hey, we'll see. We'll see. And so, spiders. It's a big bar. Now, in the past, I don't know about the size of this bar percentage wise, but I know, there's been times where I'm just looking back here where we've seen some big, nasty red bars where there's been, recoveries from, well, there was an initial recovery, then down. So either way, this is clearly the start of some correction, and we'll see how far it goes. It's what we always do, bar by bar, market internals. That's the process, day in and day out. 50 MA, and go down here, and set an alert on that moving average. Done. I think I did it, right? Let me just double check that. Alerts. Yeah. Okay. So I don't need to keep an eye on it, but let's set an alert on the 50 MA, see if it gets tagged. Take a look at the intraday charts when that happens. Let's see how things are looking. Dow's actually up here a little bit. The Dow's been showing relative strength. Financials, right? We talked earlier in the week about the fact that interest rates were going up, and that was helping financials, which they did, which has helped the Dow with Goldman and Amex, and of course Caterpillar made a huge run. And part of our discussion yesterday was that financials were in an area of resistance, and so they would stall, and of course they did. But still, this held up pretty well, even though now you've got this nasty reversal that's occurred. So let's see how far that goes. And things should, I imagine, correct further. Let's just set our resistance area there. As we always say, you don't need any fib tools and VWAPs and so on and so forth. Just look to the left, and it's right there for everyone to see. No proprietary numbers, no fancy indicators to buy. Pretty easy. Russell had bullish price action, but great example of, hey, it went down because it didn't go up. So while you can have bullish price action at resistance, if it doesn't follow through when the selling begins, that demand that was creating that pattern turns into supply and drives it lower. Now, same thing. How far does it retrace? Sideways, back down? Does it have some, another ridiculous pattern of a green bar right back up again? Well, really, that's the unknown. We have to see. Bitcoin's down. That broke down. Same situation of sideways at support, demand coming in and failing, and traders hit the bid. Now it's all the way down to the bottom of this area here, and we got a big round number of 40,000. So maybe it pokes below this for good measure. And as I look at this chart, it has to produce a thought of, it came down here, and could it be, a measured move that actually sends it down? And see what it's done here, where it lines up. This is the interesting part about these measured moves, is that when they fail, they historically do go down to the next reference point. And you can say, I just measured this and drag the line down there, and it lines up exactly with this major support point. And so could this be a head and shoulders type of top? Sure. So if it breaks here, that would be the next stopping point for Bitcoin to go down to. And if this whole, situation that began yesterday follows through as a further correction, that might exactly be what happens. And, we'll come back at some point in the future, and we'll see if that's what played out. Crude oil's up a little bit. Looks pretty darn good. So this is a sector that's showing, well, this is a commodity showing relative strength, but, well, that's a stock. XOP, which is oil and gas, that reversed down yesterday. It's coming up. OIH, right? And XLE is the most diverse of them. So power move up. This is where we want to buy on any further correction. now that this has come off of this low. We'll see how far it does correct. Silver, I don't know, inflation. Nobody's interested in silver. No, gold falling apart here. Which leads us to the dollar, which is still going sideways here. And I suggest you set an alert on this ETF to see if it breaks below here or gets back above, because this move, one way or the other, is going to have an effect on interest rates, oil. And so, this going sideways, currencies are tied to interest rates. And so if the Fed is going to raise short-term interest rates like they say they're going to, right, and markets anticipate this will continue to stabilize and stay high or go up. And that has implications for many things: commodities, real estate, stocks, and so on. So there's good things about a rising dollar, a strong dollar, and there's bad things. We'll cover that at some point in the future. But if it drops, right, that's going to have effects too. So this is something that you don't have to keep an eye on all the time, but there are certain times where, it has more influence on what's going on. So set your alerts, be aware of what's going on with that. Transports, gave it up, was up at resistance. And can the dollar drop with rising? Anything can happen, Thane. We know that. But when we look at currencies, and whether it's the euro or the British pound, the yen, it doesn't matter. There are connections between interest rates and currencies. And so a stronger currency usually is lined up with rising short-term interest rates. And so we'll keep an eye on that. What did the VIX do yesterday? Of course, it's supposed to have popped up, and it did. Something we've been, I talked about. Hey, they're low, but they can go lower. So while this is low here recently, you go back the weekly chart. That's easier. You can see it can go down to 10, and it can stay down there. So, the idea of the VIX is low and that's bearish really is something that doesn't hold any weight when you look at it. But now that it starts to rise, and this is a good even internal market gauge with using the tick just as a guide. Look, if the S&Ps are dropping, like, this should be going up. So while it's redundant, it's just a way of looking at this and having confirmation of that everything is doing what they're supposed to. And you can see here when it started with this little breakdown failure, these kind of patterns we talked about yesterday in MT Live. So, all yours, Dan. Oof. John Williams asked about Google support. That crushed the support. Right.
Yeah, the things were getting tossed out yesterday.
That's nasty. Woo.
Absolutely. And what we said, well, what Ken said about interest rates, being more aggressive, whatever, I think that's what I kind of read too, is what spooked the market. I was shocked that, we had this talk. I was personally shocked of the magnitude of the reaction in light of it being old news. But obviously whatever questioning of Powell after the announcement and or at other meetings, it didn't come true like that. And that's the only thing I can explain. So we have our inventory, we started cutting things, and we unfortunately, or I unfortunately, missed this initial low voice. Let's see. No, everything looks normal. So unfortunately, I think the time to be shorting and in call spreads was under this initial bearish 15-minute bar. So that'd be 2:15 Eastern yesterday. And then you can see it just waterfalled, and there was there wasn't an easy way to get on because we are kind of waiting for a continuation pattern. But now this is, gapping up a tiny bit here, but we'll see what happens here as always in the first half hour. So any questions on opens, just ask. Otherwise, I'll go right to, there's not many earnings, but we'll see what I have here in the list. D-Dog, it's in a nasty free fall. So it's a nice gap into this bar with a price void, and it's a nice pre-market possible day trade. There's a lot of damage done, so I don't envision any swing longs here, for a while, just day trades or credit spreads. So this ear I saw popping this morning, I saw it when it was like in the low sixes, and then that would be a fantastic gap. Because, we talk about all the time trading these bottoming patterns, and you don't know if this is a bearish consolidation to go to zero. I mean, look at this nasty thing. $80 down to 450. That is nasty. So we always say we need a something shock bar, event bar, and they come in different flavors. And this one is coming with a pro gap. But the problem is now it's run too much. That would have been my beautiful target is 750 to 850. It's already there, so can't do anything with it. Now, I was hoping this would be another type of similar candidate. It was up, you see here, almost 670, gapping over, and now it's still, let's see, 568 here is right to 20 MA. So it's gapping over yesterday's bar. So I have that in the bottom right here. I have no idea, Ken. I have no idea. I don't go to that site. So unless one of you all tell me. So I have it in the bottom right here. That's a possible long as a gap candidate. UEC and I say here's a bottoming pattern, but there were signs of bottoming. At the 200 here is where it bounced, and then big green bars. And then it became a trading range yesterday. Tried to break out, got slapped down, gapping up to resistance. Maybe 30-minute high. We'll come back to it. Bed Bath & Beyond, ugly crack yesterday. We were also been saying the last couple of days that so many bottoming patterns have been failing, which makes sense, right? And, particularly if they're selling the leaders, look at Apple, Microsoft, NVIDIA. Those are three Wall Street favorites. This could turn out to be a big old M top. Look at that M with a little breakout failure. Google, Greg showed, Microsoft. That's not, it's a topic pattern. Topic pattern. All right, Netflix, we had a nice trade in. Wow, that thing I actually was watching it to see if it would have a reversal on support. And obviously everything was just getting tossed out yesterday. DKS, a big gap. I don't know if they said something with affirming guidance or whatever, but that's a nice gap into, we use retracement analysis, not only from pivots to pivots, how far does it retrace? Like, for example, this pivot in mid-December, so you measure the distance from there to here. And so now the week's high, Monday's high, came pretty darn close to that. So that's almost 100% retracement is bullish. So in your head, using retracement analysis concepts, your bias would then say, all right, buy a bullish setup that doesn't exceed a bullish retracement level. What does that mean? Well, pull back less than 40%. This one did pull back more than 40%, so I'm just eyeballing it. But today's gap could be my shock reversal bar. So I'm gonna put this in a window on my other screen. DKS. FRLN, here's another potential bottoming pattern. It's on a steady, nasty downtrend, lower lows, lower highs, green bars ignored, declining 20 and 50. But here's the shock bar. That's up at 260. We'll come back to that. Costco, we put on a call spread yesterday. I was looking at it just because they announced same store sales. And when I saw that on the news on CNBC, it didn't show where they were trading. And I said, oh no, please don't let there be a disaster on Costco, because we shorted a call spread on it yesterday, topping pattern. We did something interesting in the green room looking for call spreads because so many things were extended. So Greg said, hey, look at this. I'm going to pull up my scan here about the trending stocks with the strongest ADX, and we're looking to get into things that have had a big run and then are starting to crack with the broader markets. And we didn't find this in that scan per se. This came from somebody in the green room, but that was a good approach. All right, so Jason typed this in YouTube. What about the news from the feds? They're starting shrinking the balance sheet. But Jason, that's old news. That's exactly what they said at the last meeting. They're shrinking the balance sheet, and they talked about 3 rate hikes this year, which the Fed funds futures is pricing in. So same thing. We talked about it. I think it's just the minutes shocked them for, they're really, they might increase more aggressively than was priced in. So I think just in a nutshell, that's all it is. And Frenchie asking about DKS inverted head and shoulders. No, because you don't have good shoulders, Frenchie. A shoulder is more of a consolidation with a neckline, whereas this is just, just higher lows. But now see, look at the gap here. It's almost 100% of yesterday's high. So that is a bullish shock bar. So that's step 1. Step 2 is, let's see what happens in the first half hour here. All right, I see D-Dog here failing. So I'm just gonna, let's see this. So D-Dog's a good example of my quick and easy 2-part test. Do I have a bullish gap on the time frame I'm trading? Number 1. Number 2, put it in a 5-minute chart, see what it does. So it's only 9:31, 1 minute. And I'm already taking this off my interest list. It gave up the bullish gap. So here, I'm going to put DKS instead there. This would be actually a perfect 30-minute high over, over 113. That's pre-market resistance. Oh, yeah. Thane, that's a good point. No, right. It's right. So that there is a, no, right. Okay, so that's what someone on YouTube is saying too. All right, that is a correct statement. Okay, I didn't know if that's what, okay, thanks for clarifying. So what they're saying is, look, just because the Fed is stop. Okay, so here, I'll give you an analogy. Okay, you've been eating, do you remember that movie where the dude was eating Big Macs? He ate, what was the movie? He ate Big Macs for like 3 straight years every day, and he became a pig. So that's what the government, the Fed's been doing. It's been eating Big Macs and buying these bonds, 120 billion for all these years since Corona announcement. And now they're just saying, okay, I'm gonna stop eating Big Macs. Exactly. Okay, you fat pig, you're not eating any more Big Macs, but now you're 414 pounds. What are you gonna do about that? So, right, so that is another issue that, what are they gonna do with these? I talked yesterday, yeah, look, Bob was on my list, definitely. Yeah, we were looking at this yesterday. Yeah, this looks fantastic. I'm gonna get rid of Mullen here. Like I said yesterday, I'm not an expert in textbook knowledge of or politics of what the Fed does. But what's this? Supersize me, exactly. Oh, that's right. That was the name of the movie. Yeah, it was Supersize, whatever. The guy went to Big Mac, it's McDonald's, and said, "Give me all your pig size junk." So anyway, I don't want to waste time talking about this now, but I'm still watching the markets here. We got climactics on the 15, so I don't mind a long scalp. We just need to find the right setup is all. But anyway, my point is, will they unwind it? Will they just magically make it there's Baba. Let's look at Baba. Will they magically make it disappear? So that, I don't know, but I do know that they're very political, right? And if they can prevent disrupting the market, the apple cart. All right, Q's bouncing here. All right, let's concentrate. And anybody have any long scalps? I'm looking at all my 15s from yesterday that got decimated. Apple has a nice using it's Baba. Baba looks great. You can buy Baba right here. Stop pre-market low or under that 20 MA. I'm looking at a put spread, but I like it as a day trade. It's the best looking long I've seen so far.